and welcome. You're watching First Stick. I am Suyash Maheshwari and with me in the studio is Amit Ranjan. We have got an action-packed half an hour ahead with plenty to cover. The September quarter results of two Nifty behemoths, Reliance Industries and Maruti Suzuki, will come out later today. We'll get you the street's word on that. We will also be joined by Sudip Bandyopadhyay of Indices Capital in a short while from now. But before we delve into all of that, let's begin with a quick check of the morning mood on Dalal Street. Now, Indian markets opened in the green with the first stick for Nifty coming in at 18,928 mark. Now, this was on the back of a mixed cues in the global equities. US stocks tumbled on Thursday, dragged by tech mega cap shares as investors digested mixed quarterly earnings and signs of economic resiliency that could encourage Federal Reserve to keep interest rates higher for longer. S&P 500 fell 1.18%, notching its sixth daily decline in 7 sessions to close below the closely watched 4,200 mark. Nasdaq, on the other hand, was down 1.76% and Dow ended almost 0.5% lower. The European markets were muted as well, with the broader Stoxx 600 index down almost 0.5%. Asian shares, however, were trading firmly in the green, up 1 to 1.5% as US 10-year Treasury yields cooled off over last night by about 8 to 9 basis points. Coming back to home, Indian markets have maintained more or less the morning momentum, with Nifty 50 trading almost 0.63% higher this morning, just about 24 points shy of that 19,000 level. At 9:30 a.m. this morning, it was at 18,976 mark, whereas the Sensex was also up 0.63% above the 63,500 mark. Nifty midcap 100 on the other hand was up about 1.5%, trading below the 39,000 mark but at 38,669 mark. The small cap index on the other hand was up 1.85% above the 12,600 mark. India VIX, which is the volatility index, also saw a sharp decline as it was down by about 3.75%, sitting at 11.29. Now this is as of 9:30 a.m. this morning. Talking about sectors, Nifty Bank was up almost 0.5%, actually more than 0.5%, up by about 0.57% this morning and trading above the 42,500 levels. Nifty IT was also seen showing some resilience, with the IT pack trading with gains of about 0.75%. Auto was another pack that was trading in the green. In fact, all of them are trading in the green. Auto pack was up about 0.6%. FMCG was up 0.22%. Nifty Pharma was up 0.4%. And Nifty PSU Bank also, started the day, kicked off the day on a stronger note, up almost 1.4%. Now, these numbers are as of 9:30 a.m. this morning. The markets have since, built onto those gains and are trading at, slightly higher levels. Now, Amit, coming to you, I mean, the kind of bloodbath that we have seen in the last week or so. First of all, thank God it's Friday. Finally, yes, we are seeing, some sort of a correction take place. I mean, a lot of a bounce back take place. And a lot of factors are at play, both global and domestic. But I want to talk to you about the domestic factors first. We have two big earning results coming out today. Let's start with Reliance Industries. What's the overall expectation over there?
A little moderate increase. I'll start with Reliance Retail. So Reliance Retail, the revenues were up are expected to be up 3.1% from 69,962 crores the last quarter, first quarter of this year, to 72,134 crores the quarter ending September. EBITDA, the earnings before interest, depreciation, tax and amortization, is expected to jump 5% moderately from 5,151 crores to 5,409 crores. Margins are expected to jump marginally from 7.4% to 7.5%. It's a very marginal. The key point to note will be the sustained improvement in the earnings before tax, interest, depreciation and amortization due to the operational leverages. On the year-on-year context, Reliance Retail is set to grow surge 11.1% compared when compared to the same quarter last year.
Wow.
Again, on the year-on-year basis, the EBITDA is expected to surge 22%. Mind you, it has surged, is expected to surge only 5% quarter on quarter. But year on year, if you look at the same quarter last year and this year, it's expected to be 22% up. The biggest highlight of Reliance Retail has been the big influx of funding due to the $100 billion valuation.
Yeah, that's actually something I wanted to talk about. In the last quarter, in Q2, we saw, Reliance Retail raising, somewhere around 15,000 crores from marquee players such as your QIA, such as your KKR, at a valuation of $100 billion. Now, at a valuation of $100 billion, Reliance Retail at current levels is worth more than HUL, it's worth more than ITC. So, I don't know when this demerger activity is going to take place, but clearly, it's among the top 10 companies as far as market capitalizations are concerned. So I think once the company is carved out from the conglomerate, it will be a big value unlocking process. And finally, because I was also reading brokerage views, this is $100 billion valuation is coming from the fundraising side of things. The brokerages have pegged the valuations at about $105 to $120 billion. So a significant, jump up and value unlocking activity that will take place once Reliance Retail.
Most of these investors are from across the borders. So you may expect that the investors are expecting big moves by Reliance Retail outside of India as well.
Yes, and
very big moves.
Of course, and considering that these are marquee investors, you do not expect them to, sell off stake at a time when volatility hits. So these are investors that are actually investing in the growth of Reliance Retail, and we are seeing a fundraising to the tune of 15,000 crore in just one quarter. So that will be, from the management side of things, I will keep an eye on, how those funds are put to use. How much is that contributing to the entire growth of Reliance Retail as far as the, store additions are concerned. Other than that, I think one of the things that the street will be closely tracking will be the demand coming, from the festive season. Now, as we know, festive season has shifted from Q1 to Q2 to Q3. So we'll see probably some moderation of revenue and profitability on that front. But the overall demand outlook, at least from other companies that we are seeing, remains robust. They are expecting wedding season and festive season to, really help boost their revenue as, revenue and volume growth. So I think that will also be the case for Reliance Industries. Also footfall on a quarter-on-quarter basis, how much that has improved, store additions. That all will be keenly tracked by, investors on the street. Jio is another one, of the companies that we'll be keeping a close eye on.
Similar increases, but for the margins, which are much bigger. So net profits in Reliance Jio have jumped 3% from 4,863 crores the previous quarter to 5,010 crores this quarter. Revenues have jumped 3.4% from 24,042 crores last quarter to 24,850 crores this quarter. Margins have jumped marginally 50 basis points from 52.3% to 52.8%. Now, analysts estimate that during the second quarter of financial year 2022, Jio might have added as many as 10 million subscribers.
Wow.
Now, that compared to 448 million in the previous quarter that they had added. So, a little bit. ARPU of Jio for quarter ending September 30th, 2023 is projected to be 135, indicating a 1% growth from the previous quarter of 180.5.
All right, that's the expectation on Reliance Jio. From what I can see, the preview that you have prepared for us, net profit will cross that figure of 5,000 crore for the very first time. It seems Amit, and revenues also, see a significant bump up of about 3.4%. I think this is on a quarter-on-quarter basis. So a good bit of jump on a sequential basis of about 3.4% is what the street is expecting. Margins also look fairly like, I mean, at least what the street is expecting, it's looking fairly steady on a quarter-on-quarter basis as well. I mean, 52.3% in the year-ago period to, in the Q1, quarter 1, and 52.8% is the expectation now. So about a 50 basis points or so jump is expected by the streets. I think, as you rightly pointed out, the two key monitorables for Jio will be the subscriber additions, as you said, could be to the tune of 10 million in Q2 alone.
Quarter, yeah.
Wow. And ARPU, which is average revenue per user. How much is that expected to grow again?
1% from 180.5 to 182.
But that's on a sequential basis. 1% is fairly I mean, if considered sequentially also. And I'm looking at the stock also this morning. Amit, the stock is up about 1.38%. And I mean, talking about Reliance retail stock, Reliance industry stock, mind you, it's been pretty much range bound. It's been trading in the range of about 600 points from 2000 to 2600 for the last 25-26 months or so, and has not really given a breakout. Even if we add that, the lost bit of market cap because of the carving out of JFS, it still sits at around, 24-2500. So still well within that range that we have been seeing it play out over the, the last 2 years. Talking about returns, year to date, the stock, however, is down almost 14%. Actually, after today's bit of a bounce back that we saw, it's down about 12.5%. In the last 6 months, the stock is down nearly 5%, and from its 52 weeks high, Amit, it's down almost 21%. So investors, perhaps, if looking for value, Reliance industry stock looks like, as far as its historical valuations are concerned, it's looked fairly priced. But then again, the big breakout, at least for Reliance industry stock, will be that value unlocking exercise that is expected to happen within the next few financial years. That big demerger announcements, the carving out of, hiving out of separate entities. And I'm also looking at the overall expectations on a consolidated basis. Refining margins, Amit, I can see are expected to improve, and this will be on the back of a softening of crude prices. Now, remember last time we were coming off that spike in crude prices, where crude had touched nearly $120 a barrel, coming right out of that peak because of the Ukraine war. In the previous quarter, it has pretty much hovered in that range of 75 to 80 $80 barrel mark. So I think that will really help margins for the company, as far as refining margins particularly for the company as far as this quarter is concerned. Now, this will be on a year-on-year basis. However, the street is also expecting, the petrochem spreads to, play a spoil sport and take away from that margins. Now, this is Reliance Industries for you. Another one we have is Maruti Suzuki. What's the call on that?
It is the India's largest original equipment manufacturer when it comes to automobiles. Is expected to report a jump of 42% increase in its net profits for the quarter ended this September, from year-on-year, the same quarter last year. Now, this is basically on the back of a favorable product mix, the price hikes that have been undertaken by Maruti, and some of the softening of commodity prices. They are expected to announce their results today. Now, as per average estimates, Maruti is poised to post a net profit of 2,921 crores in the second quarter, compared to 2,061 crores during the same period last year. The company's revenue from operations is expected to increase to 35,218 crores, marking an increase of 23% on an year-on-year period.
Wow.
During the same quarter last year, Maruti's revenue stood at 28,543. So that's quite a bit, 23% jump there. EBITDA margin is expected to be about 11.1%, up more than 180 basis points on an year-on-year basis. So Maruti, because of their price increases that they've undertaken, softening of commodity prices, is expected to post very, very decent results when it comes to revenue, margins, or even net profits.
I mean, looking at the expectations, despite that, festive season not falling in the previous quarter, we are expecting a 23% year-on-year rise in revenue. I think that figure really stands out for me. And, I think a 50% increase in net profit is also expected, right?
Yes. 42%.
So 42%. I think some of that will come off because of the softening of input costs. But then we also can expect some sort of efficiencies for the company, operational efficiencies improving over a year-on-year basis. I'm also looking at the stock of Maruti Suzuki, Amit, this morning. The stock is up about 1%, currently trading above the 10,500 mark. And I mean, let's look at the historical returns also of Maruti Suzuki. In the last 1 month, it's down about 1.26% compared to its peers, Tata Motors and Mahindra & Mahindra. Tata Motors is actually up about 1%, whereas Mahindra & Mahindra has been a laggard. It's down about 5.6%. On a 6-month basis, pretty much Mahindra & Mahindra and Maruti are in line, giving returns of about 21 to 22%. Tata Motors, on the other hand, has been an outperformer, up about 30% or so. Also looking at the brokerage calls, I mean, the estimates that I can read, around 17 analysts are expecting, a average target of about 10,900 rupees on Maruti Suzuki, which implies an upside of about 3.5% from current levels. I mean, we saw Motilal Oswal raising the target price, I think, to the tune of 11,900 on the stock. So around a 12 to 13% upside over there. So things are looking really bullish for Maruti Suzuki. I'm made to understand that our guest Sudip Bandyopadhyay of India Trade Capital is also here. Good morning, sir. Welcome to the show. I mean, since we are talking about the earnings, what are your broader expectations about, from Reliance Industries this time around? A steady quarter is expected?
Yeah, definitely a steady quarter is expected. Look, I think the Singapore GRM have moved up significantly, and GRMs should be up. So the oil and gas vertical should do definitely significantly better than what we had seen in the last few quarters, and that should propel Reliance earnings. Petchem will remain subdued, and that's pretty much because of what's happening in the global market as far as the prices of petchem products. So petchem subdued, oil and gas definitely significantly positive. We expect the telecom, that geo platforms, that piece also to do well. That will be contributed by incremental subscriber addition, as well as ARPU, mild ARPU increase. Retail, of course, because of the significant increase in the footprint, the volumes will be higher. We understand that the same store sales also are increasing. That should help. So overall, we believe that Reliance results should be much better compared to what we've seen in last couple of quarters. The only point which probably will be soft segment, which will be soft, will be petchem. The other important thing, which as far as the result on the subsequent management commentary we will be watching out for, is the green energy plan deployment, and they talked about 75,000 crore deployment for green energy and things like that. We need to get little more granular details on that, and we'll wait for that.
Also, Mr. Bandyopadhyay, what's your outlook on the stock? Has been range bound for the last 2 years or so, and year to date the stock is down around 12%, almost 21-22% off its 52 weeks high. What's the outlook on Reliance Industries?
Well, if somebody is a long-term investor, they should just pick up this stock and keep it in their portfolio. That's been my view for some time, and it remains the same. I think there are multiple value unlocking levers sitting inside today's Reliance Industries. There is geo platforms, there is retail, there is green energy at some stage. All these are potential value unlocking opportunities. Whether that will happen in this fiscal, next fiscal, or the fiscal after that is little difficult to predict. But overall, I think there is significant value unlocking opportunity. So investors should buy into that. Overall, performance-wise, also, I think it deserves a much better valuation. My guess, without even value unlocking, a price around 3,000 is a fair value for Reliance. So it's quoting below our fair value estimate, and definitely a good buy from an investor's point of view.
Good morning, Mr. Bandyopadhyay. Coming to Maruti, it's expected to post net profits jump of almost 42% according to analysts. Do you think it is because of the new product mix that they have forayed into, gone back into the off-roader segment also? Is that the case? And what are your views on the Maruti stock going forward?
Well, a couple of things. I think you are right to that extent that the SUV segment pickup is probably will be responsible for a much better than expected performance as far as Maruti is concerned. But by and large, I would credit the input cost prices reduction for a significant part of the incremental profit, quarter on quarter and year on year incremental profit, which Maruti will clock. I think we have seen significant, softening of commodity prices, and that has been helping Maruti to post better than expected results. Also, I would say at current levels, post whatever is happening in the market, it does look attractive at a current valuation. From a long-term investor's point of view, Maruti continues to remain the largest automobile company in India. And, yes, there were challenges in the SUV segment, which they were facing because SUV was the fastest growing segment and they were not strong enough in SUV segment. Now with SUV segment pickup, they coming up with new vehicles which are doing well. I think things should start changing and changing pretty fast as far as Maruti is concerned.
All right. We also have, PM Modi inaugurating the 7th edition of India Mobile Congress. I think the visuals are coming in now. Mr. Bandyopadhyay, we'll get to you very soon. As you can see, the inauguration ceremony is going on.
जी शैलेंद्र, और जो इको सिस्टम है वो हम मान सकते हैं करीब अब 27 से 29 अक्टूबर के बीच जो इसका आयोजन हो रहा है इंडियन मोबाइल कांग्रेस का, उसकी झलक हमें यहाँ देखने को मिलेगी। फिलहाल हम तस्वीरें भी अपने दर्शकों को दिखा रहे हैं। प्रधानमंत्री नरेंद्र मोदी जब यहाँ पहुंचे थे, प्रदर्शनी का उन्होंने उद्घाटन किया, अवलोकन किया और उसके बाद वहां जानकारी लेते हुए जो भारत के अलग अलग प्रमुख नेटवर्क प्रदाता हैं, मोबाइल नेटवर्क प्रदाता, उनसे उन्होंने मुलाकात की। साथ ही जो नई तकनीक आ रही है उसके बारे में जानकारी लेते हुए नजर आ रहे हैं प्रधानमंत्री नरेंद्र मोदी। और अब से कुछ देर बाद संबोधित भी करेंगे। लेकिन अपने आप में शैलेंद्र काफी महत्वपूर्ण कि जो इकोसिस्टम था पहले शायद उसकी कमी रहती थी, फिर चाहे एक हम सेमीकंडक्टर की बात कहें या
As you can see on your screen, the PM is in conversation with Mr. Sunil Bharti Mittal.
इकोसिस्टम जो है अब एक ऐसा प्लेटफॉर्म जो है वो तैयार करके दिया जा रहा है जिससे तमाम अवसर जो हैं वो अब जल्दी से हमारे पास हो सकें।
निश्चित तौर पर देखिए किसी तकनीक के
Now, Mr. Bandyopadhyay, we have seen a good bit of a bounce back come in the markets. I think Nifty has rescaled at 19,000 levels. But, I mean, can we really trust this bounce back given that the situation from an economic standpoint and geopolitical standpoint is only, at least in the very near term, seems to be getting worse?
I agree with you. I think, there are positive factors and there are negative factors. If I talk about the positive factors, I think fundamentally and macroeconomically, nothing has changed in India. As far as Indian figures are concerned, as far as Indian macro data is concerned, I think it's all good. The challenges come from the global front. Yes, I think the geopolitical tension obviously is the biggest worry with what's happening in Israel, Palestine, as well as some remote corner of Ukraine, because now that has become remote, has been leading to a lot of risk aversion. And there is a valid reason for risk aversion. Point number one, I think US bond yields are rising to the levels, unprecedented levels, and of course the global crude oil prices going up. Now, crude oil prices directly impact India, and if it continues to sustain at a level above 90, I think it doesn't augur well for Indian economy as well as the capital market. So we need to be cognizant of that and be a little cautious as far as capital market exposure is concerned. We have, of course, been seeing a lot of risk aversion related trades from global investors, and that has led to major selling off in the Indian markets. But having said that, I would say that, as you rightly say, near term choppy, but medium to long term, we believe that Indian market has inherent strength, that once we cross over this hump, Indian markets will resume its positive trajectory.
Mr. Bandyopadhyay, keeping to the geopolitics and the hump that you spoke about, do you think it is going to escalate further with news of fresh strikes in Syria by US, which are not coordinated with what Israel is doing in Gaza. Do you think that is going to add to the volatility and the hump that we spoke about in the markets? And should investors brace for it right now?
Well, investors in the market should definitely brace for escalation of tensions. But I'll tell you something. Of course, I'm not a geopolitical expert, and my limited knowledge and limited views are only what I'm sharing here. Globally, if you look at tensions and this kind of flare-ups around the world over 30, 40, 50 years, they increase, they flare up, and at some point of time, within a short span of time, they start cooling off, and better sense prevails. So I would hope and pray that better sense prevails soon and things start cooling off. It is in nobody's interest to escalate this beyond a point, and I'm pretty confident that things will, I think, in a matter of a fortnight's time, that's my guess, start cooling off.
All right, keeping with the global markets now, Mr. Bandyopadhyay, it seems that US market is working on this theme that good news is now bad news. I mean, even on Thursday, the Q3 GDP print that came out was ahead of expectations, yet the markets saw a heavy beating on Thursday. Now, this is it because of this higher for longer narrative that's which is adding to the pain?
Definitely. I think, this is the challenge as far as US economy and US, Fed is concerned. Economy is pretty robust. And in spite of the interest rates reaching all-time high and the narrative around higher for longer, we have seen the job numbers are to an extent resilient. The GDP numbers are coming pretty strong. And, this is definitely a completely different scenario vis-a-vis Europe. Now, Europe is on the verge of a negative growth or a very, very limited growth in most geographies. The largest economy in Europe, Germany, is definitely staring at a negative growth. Whereas US, I think, even under all these pressures and pulls, is going to clock a positive GDP growth of between 1 and 2%. I think that is commendable. But on the other hand, that does put pressure on US Fed as far as inflation trajectory is concerned, and this leads to the fear that it will be higher for longer. And if it is higher for longer, I think the capital markets will have to be cautious, because the risk of doing trade in emerging markets and in equities will probably not be as attractive as a government security GSEC yield, and that is what people are worried about, and that's why we have been seeing sell-off in high beta stocks and high beta markets, which of course India is, if you look at it from a US investor's point of view.
Now, talking about US investors, foreign institutional investors have net pulled out, nearly $1 billion from the cash segment yesterday alone. Now, the net short position in the market is currently, I think, around 89 to 90% or so. And I think this is the first time in a very long time that the sentiment coming from FIIs is this negative. I mean, and looking at the factors, all of these factors that are at play, as you also mentioned, seems to be, global. Are there any India-specific factors that are spooking FIIs at this point in time?
Well, definitely. I think the only India-specific factor is crude oil price, and that's to a great extent dependent on how this geopolitical crisis evolves. India is one of the largest importers of crude oil, and oil prices going up definitely hurts Indian economy and pretty much the Indian capital markets. So global investors of course are cognizant of that, and they will be watching the scenario very, very carefully. I think beyond crude oil, India doesn't get impacted even indirectly because of this conflict as such. The impact is of crude oil prices, and we have to be a little careful about that.
All right, that's the view coming in from Mr. Bandyopadhyay. Mr. Bandyopadhyay, always a pleasure speaking to you, sir. Thank you for joining us on News9. Amit, also thank you for joining us on this Friday morning. But with that, we have completely run out of time on this edition of First Tick. Keep watching News9.
Delhi has the fastest growing metro network among G20 nations.